Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Monday, the 13th of March, 2023, and I'm looking at my clock. It's about 6:37 p.m. Central Time. You know, today reminded me of all my years in the markets, all right? I have been a registered broker since '69. I have been through the Black Mondays, and today they were referencing that and what happened on the interest rate sector. You do realize, for example, you could have had just recently over 5% on a 2-year note. It's back down to about 4% in that area. That doesn't happen often that way. You don't get 1% moves in 72-hour periods. So this is unusual. But if you watch the stock market, how it tanked and what it's doing in individual stocks, I remember this because having owned both a stock firm and a commodity firm, you are on the front line because at the end of the day, as the owner, it's your money that, hey, you have to put up if you need more capital, do things of that nature. And it was reminiscent of it all. I'll start off by saying strong Mondays, up or down, big drops, big rallies, are often met by some reversal on Tuesdays. If you don't believe that, go into the, and I'm going to promote it for him, the Stock Trader's Almanac, written originally by Yale Hirsch, his son runs it now, gives you all these bits of wisdom. You know, I've read so many books over the years. I've met so many people, and you learn from them. But you know what you learn the most from? Your own losses. It's an interesting word, not your winners, your own losses. Because what you're trying to do is say, what did I do wrong? Everything fit in right, and why didn't that trade work out? Well, that's why I created my different courses, because they try to give you a discipline that you can bend and play with. That's the idea. But you got to have a beginning. You got to have a middle, and you got to be able to, if you're going to add to it, add. When I learned, for example, Bollinger Bands from John Bollinger, he used to be on a TV show I had called Stocks, Options, and Futures. I'd ask him about it. I didn't have a lot of faith in it, and it became one of my favorite tools. I used to be teaching MACD, relative strength indexes, pivot points. I mean, I've taught my whole career because it's one of the ways that I'd fill up a room, get people to come in, they'd open accounts with us, and I travel around the country doing this. Today, you can do it with the internet. So the game changes. And I still get people that subscribe because they want to not only learn, they want trading ideas, plus I communicate with them. So during the day, people will write me, Ira, what do you think of this? And I'm doing 30-second videos for them, opening the charts. Why are you doing this? Or no, I like what you got. And we talk about it. And I spend a certain amount of time doing that. And my subscribers get that. But we're in a situation right now where it's a banking crisis. It's not over. I realize you think it's over, but it's not over. They put a Band-Aid over the problem today so you can get your money out. They did great. I don't know how it all works yet, how long it's all going to be able to work. Is it just the banks that are in trouble? Because other banks are going to say, well, you know, you said everybody can do that, and basically you've guaranteed the money beyond $250,000. It's a failed bank. What they haven't shared with anybody is the bank negative or positive? I happen to think it's probably positive. When they sell off all the assets and get a value for what they've got. The auctions this week did not result in a buyer. That's very clear. So now what are they going to do to sweeten that up? Can it be done? But in the UK, HSBC came in and the Bank of England. They took care of the SVB branch that's there. By the way, SVB is in 13 countries, so other countries have the same problem. They had 17 branches here, and now we're hearing of other banks. As you already know, the Sovereign Bank went bye-bye, and is there going to be another one tomorrow or the middle of the week or the end of the week? There easily could be when you're seeing stock prices fall 60, 70% on some of these companies instantly. Somebody knows something, what's going on. All right. But that's what they're trying to do, give you a backstop and applaud them. The Biden administration did a great job of nipping this in the bud. This could have been a true bank run. It's a problem, but it's not that. Now, that leads us to tomorrow because we get the CPI number. What does the Fed do with this? Well, 50 basis points is not going to happen. All right, if you go to the Fed Watch page, you can see what the percentages are. In my newsletter tonight, it started off in the 70s today that it was going to get 25 points. And by the end of the day, it was like a 60% tile that you'll get 25. If the number's a hot number greater than last month's, I think the Fed still goes 25 basis points. If the number's a wobble, parts of it are stronger, parts are weaker, they might hold. If it's just weaker, why are they going any basis points at all? They don't have to pivot down, but let the situation develop. And the wording I would be giving, by the way, they don't make a decision tomorrow. The market will make the decision what the market thinks. What they'll do on the 22nd is they could say, we got the wobble we wanted, PPI came in afterwards, blah, blah, blah. And now we can sit back for a moment and see, is this the lag effect we were talking about? It's one way out. And what you don't want to do is kill the patient as you're trying to cure them, right? So somebody unfortunately gets a cancer illness, the medicine can kill these people. So you got to learn to keep them alive to get them cured. Well, same with an economy. It's no different. When I look at the S&P, it's back in bear territory. To me, it's under the 18-day average of closes, but this is a weekly chart, so it's under the 18-week. Now, let's back up on this just a little bit. We don't want to see this week. Last week, it did this. It was down 4.5%. So it broke through everything, and it stayed there. To me, that's bearish in itself. And you can see how it was the week before. You broke down, and you've kept it there. Okay. So I think you've re-entered on my simplistic way that when you're under the 18-week average, you have a bearish bias, and when you're over it, a bullish one. I'm in the bear camp. When I look at this chart, I go, what do I have? Well, the pattern is bearish. If you look at the swing line, I'm going to come back. You don't see a swing line here. So are you going to say, oh, it's up here and it's over here? You got your magic way. Nah, I do it quantitative. It's very simple. The swing line has got lower highs, lower lows. This indicator I wrote is consistent. It will give you if you're trending or not trending. Downtrends, lower highs, lower lows. It's how it draws the lines. I know a bunch of you want me to write this and lease them into other charting software, and I'm probably going to do it. We're very close to doing that. I have all the formulas, so it's simple. So I'm looking at that. And okay, that's a downtrend until the market gets back over 40.1975. I pointed out that we're starting to get the 18-day average running at these other moving averages. They're about to converge. It'll be this week. You got the 18 potentially getting under both, the 100 and the 200. Notice how they're right at the same numbers. You're only 10 points over it. So when it crosses, it can be a classic crossover where the short term gets over the medium term under it, and the medium term goes back under the longer term 200. You got a real bear market at that point, and you got a lot of resistance right there. Next, you go down to Bollinger Bands, and that's where pros cover short. If you're not embedded, you're not embedded. So I think that Friday, believe it or not, Friday's where I think the pros came out. They didn't go through today. I don't think there was any panic with them at all. I would have told my clients and did tell my subscribers, no, you don't want to be pressing that. Now I'm going to tell them, I think up here, if we can get away from being oversold. Oversold I define as either of these numbers being underneath 30. Now, if they develop sideways action under 20 for several days or more, they embed and lock in. That tells me forget getting up there. There's another moving average I use, and if it hits it, you go short aggressively into it. You keep looking for the Bollinger Band to get hit as the market melts itself down often. Does it always work? Nothing always works. Nothing. Death and taxes maybe, but even that, some people don't pay the taxes, but they all die in the end. In the micro mini NASDAQ, you've got something of sideways action. You came down and you found your support momentarily at the 100-day average in the Bollinger Band. Now, this is where when I talk in the morning to traders in my subscriber videos, I explain, banks are not part of the NASDAQ. They're not in that index. This is a tech index. It is impacted because the tech companies at the banks could have problems if SVB didn't release the money, but it did. So the people are paid. Now, if I'm there and I have my money at SVB, what did I do today? I had last night a chair outside. I would have taken it and said, hey guys, I'm sitting here till you open. I want a cashier's check if you won't wire my money out. And I'm walking down with a portion of my money to another bank so I can operate. If I need the banking relationship at SVB, and many do, the banks were good to them, you keep some money there. But you get enough so you're operational. Yes, I know the government has said everything's protected. The government says a lot of things. At the end of the day, you're responsible for your company, your own personal assets, your fortunes. Got it? You protect yourself. I'm not telling people go do a run on the banks. Use your head. You got a crisis. Diversify. Isn't that what got these banks in trouble? Their depositors weren't diversified. Well, duh. Diversify. Keep your business running. That's all I'm saying. In the March Micro Mini, you're down to the lower Bollinger Band. Are we embedding? Uh-oh. You can't count tonight because we don't know how Tuesday's going to close. Both numbers are under 20. Both numbers are under 20, not under 20. Again, I'm going to repeat. I started off Tuesday reversals. Are we going to get a reversal? Is the market going to embed? You're at a crucial time for me with putting out severe sell recommendations if you get embedded. Did you embed in the Russell? Can't count today. Day one of embedding, Monday. I'll go backwards. Day two, did the day before embed? No. So tomorrow is the key, which is tonight as we're looking at the markets. I do think you're going to lift over the band, but here too, I'm expecting the 18 to get through these moving averages. I think you've got a real problem in the market. I don't think it's going away. I know you'll tell me, but Ira, interest rates don't have to go up. It looks like they're through. The Fed might be through with this. Well, the reason they're through with it is because the economy's entering the recession stage and things are about to get a lot weaker on you. That would be the only reason. If that's not the case, then the Fed's got to continue because inflation's going to continue. The way I looked at it, people didn't get fired today. The jobs are still there of all these companies, and it's spring and summer. We still have an inflation issue. Is the Fed through? No, probably not. Not if jobs stay strong. Don't let the emotion of this banking thing take you away from the whole country. It's not a tech company. It's not a tech country, everything. Everything's a mixture. We need to see if inflation is balking. Did it turn? In the bonds, you're overbought, you're at a Bollinger Band. Bye-bye, you own it. 10-year note, you're over the Bollinger Band, 100-day average. Do I think you'll stay there without embedding? Nope. March dollar index. Now that's March. I should have made it June. I'm sorry. Higher highs, lower lows, nothing there. Last trading day in the euros too. I thought I changed these. I made a mistake. Lower low, higher high. I know I did, and I know what I did wrong. I saved it on the wrong computer. You don't want to be in that. You're stuck in sideways action here. But if interest rates are through going up, and the reason they're through is because we're weakening, I think I want to own foreign currencies ultimately on some of them, not all of them. There are countries that have said they're not raising rates anymore. So they're going to be with us. It's the ones that aren't. So the euro excites me because come the 16th, which is 3 days, I expect Miss Lagarde 50 basis points, and she'll be a hawk. She's going to go until this inflation beast is beaten down. We're there. England, no, they're saying, oh, our inflation numbers are starting to fall. Maybe we can back off from that. So you got to know where you're going with it. In Bitcoin, look at how this market held. And it held beautifully right where I teach you, the Bollinger Band. Yeah, it went down one more day. Who cares? It took off to the upside. Then we get to the Brent versus WTI. I just like to know the differences. The biggest number was 677, now 648, but it's staying under these numbers. So it tells me the general posture is the differential is still in a bear territory. to get smaller. And if you look at Brent, what did it do? It got down to the Bollinger Band. What should you have done today when it hit that if you were bearish? The chart has been bearish all the way through. I think today was a cover-all shorts day. What about WTI? Oh my gosh, same thing. You're not embedded, you hit that, time to walk away. Now do remember that if we can continue to fall, ideally under 70, the Biden administration is unknowingly, because I don't think they brag too much. Trump had a better plan. You don't tell people what you're doing all the time. But they've said under 70, they're going to start their buying of oil for this strategic reserve. So in essence, somewhere down here, we probably have a quasi-floor developing. Gasoline, well, you scared people. So the run-up, do I look too bad when I say people come out at Bollinger Bands? People come out of shorts here? Well, down here, you made your reach for the Bollinger Band. Bye-bye. The market should fight a battle. All in here. I still think it's going to be good in the spring and summer. And in the nat gas, well, we have nor'easterns coming. We have cold weather out east. You get a little bit of a lift back towards the 18-day average. Now, I won't like this trade if you get back over the 285 level, but if it fails here and starts down again, that's it, and they probably can make another run here. I think you're at a crucial area in this right now. So you put it all together, you try to come up with a game plan, and that's what I do in the morning. So one of the things I do is, I write twice daily newsletters. I don't know if you're fully aware of that. And in the evening edition, trade this, do that. Then at 5:15, 5:30 in the morning, I'm recording my video. Now, the videos are so different than this. I am barred. People ask, Ira, why don't you say buy or sell? Tell me what to do in this video. This is a public video. I am barred, being a futures broker, from saying that to you in these videos. I can only do it behind areas that are websites. They have to have a user ID, a password, blah, blah. It cannot be made available to the general public. You've watched me, many of you, for years. Do you think I'm bashful about saying buy or sell? I just can't do it in the others. I can tell you what I think the pros are doing, but I'm not going to say what I think you should do via me. I do it in these videos. And I cover 40 charts in the morning. I talk the fundamentals. I talk the day's reports that are coming up. I give you the tidbits, if you will, as to what I'm saying. Then we rip the charts apart. I will rip both daily and weekly. We go right through it, trying to build trades. Here's the risk. Don't do this one, too much risk. Here's this. What's the risk factors? I give them to you. I give you why they're that way, what's there on the chart, and you take it and you do with it as you want. But I don't know anyone else doing it that way every morning for you. So I do this one, so you'll know, at 5:15, 5:30, and I do the ETF one at 9. I wait for the reports to come out. Ideally, government reports come out and they're done by 9 a.m. Central Time. I want the algorithm money in the stock market to first. It opens 8:30 Chicago time, the cash markets. I want that to get in, plus the reports. Then I'm ready to tell you what I think you do. That's where the timing comes from. So visit our website. It's in the research area. You'll see everything there. If you join us, it's in the member login area. I think you'll love what's in there. There's so much information, and you take it from there. You can click up here. If that makes life easy for you, it'll take you right to our research. I'm Ira Epstein. Thanks for listening. I'll see you tomorrow.